A brief background on what the 503C is, and then kind of what we're doing right now. So anyways, the 503C is in with Growth Partnership. We're in the same building with Growth Partnership and with the Port Authority in Jefferson, but we're each our own entity. And the 503C has been in existence for quite a long time. We've received money from different federal programs, from like ADDA, USDA, and we're allowed to loan that money out in the community. There's been a lot of restrictions on it to this point, as far as typically it has to be bank involvement in the loans we make, and then we kind of hop in instances where the banks won't loan enough to get everything done that the owner wants. We're kind of help fill the gap in, and on more risky projects and things like that. And so, so typically they've been loans to commercial and industrial type things. There's been a lot more of restaurants and things like that recently, but a lot of it is for different businesses that are trying to expand. We always kind of have tied into our loans that it follows a certain amount of hiring, or goes with it, or job retention, those kind of things, just to help businesses that want to grow, or just to help them buy new equipment, things like that, to help them expand their business. And so anyways, typically the loans have been in the tens of thousands upwards to like $500,000 that we've participated in. And but when COVID started, ADDA came out with a new thing, and Ashtabula County, us, the 503C, actually got a substantial amount of money from them, $1.9 million, which was really a lot more than most got in the area or around. And anyways, they did not put the same restrictions on this money as has been done in the others in the past. So as a result of that, we found that with this particular money, we're going to be able to look at things that doesn't necessarily have bank involvement. We could make these loans on our own. We could make smaller loans. We could, and still up to $500,000 loans we can make with this money that we got from them. And they didn't really put a lot of restrictions on it. We had to write our own what we proposed to do, and they had to approve it, which they did. And so now we're allowed to start loaning this money out. As part of this, we wanted to see what we could do with smaller businesses and minority-owned businesses to help get that money out in the community more. I think we've had a couple people express interest. I don't know if you filled out an application yet or not, but we are starting to get quite a few people express an interest in these loans. In fact, I brought a kind of something that we have that we're starting to put out there. You can take some, keep them.
Thank you.
But like I said, we have made some loans already with some of this. We've made a couple loans already, and that's part of what ADDA is pushing us to, is that they don't want the money to just sit there. Every year we have to make sure we get a certain percentage of the money into the community in loans of some form.
The list that I put together a list,
Yeah.
and we've added like 3 names, and I picked up another name today.
Oh, you can take more if you want. Oh, sure, take as many as you want. Yeah.
Could we put that on our site?
Yes.
We have 30 businesses, more than 30 businesses in and around a 5-mile radius of downtown. And so I've had more names added to the list.
Oh, good thing. Yeah, in fact, I should, maybe a little more background on us. It's, Sarah Bogardus is the name of our director. And then we have a board, that we meet, typically we meet like once a month to review loans that have been submitted, prior to that. JP Ducrow's on the board, Steve Sargent's on the board, Scott Treen, who's an insurance agent in the Jefferson area, is on the board, Ford Beam from Geneva, Terry Ball is on the board, she works at Glenbay. But yeah, so there's quite a few people that, well, there's probably about 8 of us right now on the board.
Well, I was going to say, Lisa actually put this spreadsheet together so it's more professional, and this one included the ethnicity, which is important. But there's one that needs to be added to this list. And I'm sure it'll probably grow.
Which is great, and it doesn't necessarily, that's another thing too, is it doesn't necessarily have to be an existing business. If someone's, seeking money to start a business, of course, I mean, we still have to review them like regular loans and things like that, but it's not necessarily that you have to have an existing business right now to necessarily qualify for the money.
We have 2 on this list. There was a gentleman that wanted to open a restaurant in this area, coming from the Queen or Memphis area.
Oh, yeah.
But anyway,
I'm sorry.
that's okay.
I was daydreaming.
No daydreaming allowed. He would be a startup, and there's a Puerto Rican restaurant that's been testing the waters all summer, or all year, I should say, from their home, using social media as a platform to sell their product.
Are they talking about getting a food truck? Somebody has actually, I don't think they've applied yet, but they were talking about getting a food truck.
I don't know. I don't know.
Because they said they were serving from a small, somewhere outside, like right now. But
do you know what ethnicity they are?
I can't think. Was it our last meeting?
Is that the one that's in Lisa's building then?
That's that one, a different one.
So
We have,
for nonprofits, or this is just?
I think at this time it's strictly for-profit businesses.
Yeah, I specifically asked Sarah that when we were
Yeah.
talking about the nonprofit center, and she said no, it's not for
Yeah.
nonprofit.
Yeah, we kind of discussed it. We would look at it. We could look at it, but it's more for-profit.
Well,
so we should take these churches off?
It's a revolving.
Yeah, 'cause we were talking about it last.
It's a revolving loan fund, so they would like to get the money back.
Right. Yeah, not a grant.
Good at it.
Yeah. It would be wonderful if it was.
Hence, it's in their title.
Okay, yeah, that's, doesn't say it's a revolving loan fund, okay.
Yeah.
Oh, it does say revolving loan, right there. All right, so no nonprofit.
No, now if somebody had we'd still be willing to discuss it. If somebody had a situation, where they needed a loan, I know it came up, I can't even remember what it was. It wasn't anything recent, but something happened where a church or somebody needed a furnace or
Yes.
something, and would have needed a
Right.
loan to get it. They could
Right.
have repaid it, but
Right.
it was just a matter. So we are willing to discuss some of those things, but we don't want to really, we're not pushing that, I guess.
What's your time frame for approval, disbursement?
As far as how long it takes once you apply,
Your
or?
time, you said the feds want to
Oh,
be able to.
no,
get
they
out
want the money out there, but
time.
once it's out there, it's continuous. As it comes back in, we continue to loan it. So I think we have a 2-year thing with them, that they want us to try and, disperse funds over the next, couple of years as much as we can.
So
But,
you can actually apply now. right?
yes, oh yeah. We have the money now. We've already been approved, they've, signed off on everything, so we can start loaning immediately.
And are there any restrictions on what it can be used for? Can they do inventory? You know, it can be used for purchasing a building, but can it be used for inventory, or what other type of stuff can you do?
Did you say no rentals?
Well, no rental properties.
Oh, okay.
So that's not, because this is for, the whole goal is like job retention and
Right.
job creation.
Right.
And like rental properties don't
So you
really
couldn't-
do either.
Unless the building had a storefront, you couldn't justify the purchase for the building. Like if it had rentals upstairs, you could justify it if it had a storefront downstairs, right, in a business, right?
Yeah, I see what you're saying, yeah. Again, it's, see, this is a good question for Sarah. Yeah, as far as what, types of things we can,
Okay.
actually, I mean, a lot of times we put it against equipment. We loan against things that actually have a value more than inventory.
Capital items.
Right, yeah.
That's what I was just wondering,
Yeah.
because like what you were talking about, you know, if you're trying to buy sweatpants, you
Yeah,
know, can you
or-
use money to buy inventory that you can now turn into cash?
Right,
Yeah.
right,
Yeah.
yeah.
You know, if it has to be equipment, then it doesn't work that way.
Right.
Although, but I guess the thing to do would be to ask if, here's what I'm thinking I might need. And,
Would
because
normally-
it's different than our typical,
Yeah, I was
what
gonna
we
say, it
can
would
loan
have
and not,
normally been
so.
something that you could collateralize. I think.
Right.
But
Yes.
with this new pot, there
Right.
might be some other open windows.
Right.
Wasn't there something where you said something about being able to draw off of, they would have a line? Was that you I was talking
A
to?
line of credit, you mean?
Yeah, like a line.
Well, this is typically, this is just a loan out.
A loan,
It's not
okay.
yeah,
Who
not
was I
really a line
talking
of
to?
credit.
What type of terms are you talking about? What type of terms are you talking about for these loans?
Well, it's, again, I don't know, did we have interest rates on there and stuff? Because we were trying to keep it,
No, it's not.
we had it we set it just above prime. It wasn't, we were trying to keep the interest low pretty low on these. And as far as, I mean, we do, it's monthly payments typically is how we go on it. Is once we set the loan up and loan the funds out, then we ask for monthly payments. Now, we've had situations where we've had to go to, in fact, actually with all the COVID stuff, we had to go to interest only for a little while on some of our loans. But, we try not to if we can help it. But we work with people because we realize these loans are a little more high risk and take a little more development than a typical, like the bank would do.
So do you have a range for the interest rate? Do you have a sense of it?
No, I think these ones, we have in the past on our other loans, kind of based on the projects, but I think these ones are more, I thought we set a loan rate on these, and it's so many points over, or no, I take that back. I think we set something to start with, but then after a couple of years, it's based on the prime plus, I think it's prime plus 1.5 or something like that. And, but yeah, we do kind of look at the loan itself before we set the initial rates. I mean, and they vary because we do them at different times and for different projects and things.
It's negotiable.
Yeah, it is somewhat, yeah.
So do you have like an application process, like you request a business plan, or
Yeah, so it's.
how deep does it get?
Well, Sarah, and again, this is kind of different because in the past, we've always followed the bank. So the banks usually, did a lot of the background, the work for
For
it.
the underwriting?
And so, yeah, and so these ones, we're gonna do more of that ourselves. And so, I mean, we will ask for kind of, you know, your business plan. And, but we're gonna try and work with people more, because, and we are also, the other thing we're gonna ask, depending on the experience of the person that's seeking the loan and things like that, there are some programs that are available locally that people can get into, as far as helping with your business, helping
We're talking
organize
like
it, run
the
it.
Grow Biz and
Yeah.
the Neil Fund.
Right, right. And so we want to work with those groups on some of this stuff too. Now, if you have a background, you've had your business for, you know, quite some time and you're experienced in everything, then it's not so much of an issue. But some of the newer ones, we want to try and get them to make sure they're going down the right path.
So do you have a preference of like one type of project over another? Like, for example, if it's collateralized, I mean, you prefer that with a building or something?
No, I mean, and
Just a,
and again, this is kind of, it's gonna be a little bit different the way we look at it and everything, so, yeah, we,
basically it's unsecured, and maybe,
yeah, well, because typically, on the things we've done in the past, we're behind the bank always.
Right.
So we're like, yeah, so it is close, you know, we might get it on the equipment, but it's still, we still are in line behind the bank always whenever we
It's
go
like
in,
having the
so.
third mortgage.
Yeah, yeah. So I mean, that's typically how we've kind of done. So, I mean, on these, I think we will seek to get what we can in the way of you know, something to back it up or something. But, you know, again, it's kind of, you know, with some of these loans, we see that we would be the first lender on it, so we would have, you know. But again, I think, yeah, it's Sarah Bogardus is the director there, and I should have brought some of her cards with me too. I don't know if is anything on
She's
there.
listed at the bottom of your page.
Is she? Because she'd be the one really to get the ball rolling on you know, and to ask all the questions about how to get.
Well, she's really
set up.
easy to talk to.
Oh, she is, yeah, she'd be very helpful.
nice program.
Well, that's what we hope to.
I mean, if somebody has the entrepreneurial spirit, this is a good stepping stone to get things going.
And that's the other thing, is we're trying to make it so, you know, we'll go down pretty small size on loans, just for people that are maybe wanting to start to do something, to step out on their own. And so, you know, maybe they need, you know, like $7,000 or $8,000 or something to take that first step. So, we're going to try and make it so they can. You know,
And
they
that's
have
why
a
it's
chance.
important that we include them when we try to do this open for business project. If we have them on site, well, we were thinking about having all the bankers and the business experts at the library. So that way, once the people had visited the different locations, they could go to the library and meet with those business partners or experts. And they could discuss, what do I need to get in this brick and mortar? Do I need a business plan, insurance? What kind of insurance do I need? What's on the table? What I need to prepare to bring to the bank to make this loan happen for me. So, and it's a great way to educate people that, like you said, Rick, has that entrepreneurial spirit, and really get the ball to moving. So we need buns in the seats. That's what the goal is.
Well, and the buildings downtown are really reasonably priced, you know, either as rentals or as purchases. And